Okie dokie. Good morning and good afternoon, everyone, and welcome to today's Lawpath webinar. Plan like a pro, your legal and accounting checklist for 2026. My name is Joel Comerford. I am a legal and accounting consultant here at Lawpath, and I am your host for you who have never joined. Thank you for taking an hour out of your day to join us, especially at this time of year when everyone's juggling deadlines, clients, staff, and obviously planning for the year ahead. By showing up today, you're already doing something most business owners don't do, which is investing in the back end of your business before the new year starts. So it's always good to get a head start. Now, just a bit of a disclaimer before we begin. If you are new, we will be recording this webinar today. We will upload the slides that you're seeing on the screen here, as well as the episode onto YouTube, and I will compile it and send it to an email out to everyone afterwards. So don't fear if you have to duck out early or if you've come late, you will be able to catch up on all of this. Now, before we dive in, if you are new or if someone's referred you to Lawpath and you're coming on here for the first time, who are we? So over here at Lawpath, we make smart, simple, legal and accounting accessible for small businesses. On our platform, we allow you to create legal documents, manage compliance, and connect with lawyers and accountants on demand, all in one place. Doesn't matter what state you are in within Australia, everyone's privy to use Lawpath. So over the last decade, more than 600,000 Australians have used Lawpath to keep their business compliant, and we have proven to save over 500 million in legal fees along the way. And because we operate on a subscription model, your legal and accounting support becomes predictable, affordable, and unlimited. So you're not looking at the usual $1,000 to $2,000 invoices every time you need help. It's fixed fee, you're covered for an entire year, and you have those on-call, on-demand advice and assistance whenever you need it. So I'd just like to ask a few questions. These are going to be rhetorical questions, but just something to consider for everyone who is new. I am aware that there are a lot of lawyers and accountants and people who are initiated and they've been around for a while, but this is just some stuff maybe to ask the newbies. Have you completed your essential end-of-year legal and financial housekeeping? Are your contracts, agreements, and policies updated for how you operate in 2026? Is your business structure still tax efficient and appropriate for your growth plans? Are your BAS, Super, STP, and ASIC obligations locked in for the year-end deadlines? And do you have a cash flow plan and a 2026 budget that actually reflects real numbers and real goals? If any of you feel like it's a no or you're not sure, today's content is hopefully going to give you a bit of an idea of what you should be looking at. And if you feel like moving into 2026, you would like some support in these areas, especially in relation to what I've asked, go ahead and throw yes in the chat. I will take your name down and I'll make sure that I get hold of you today, or we can book a demo sometime this week, or hopefully before everyone takes off in December, just to see if we can get you on get you on the right path essentially for your business moving forward in 2026. I will go into detail later on about some of our plans if anyone is interested as well, but keep in mind we do have our Cyber Monday deals that are ending on Sunday, December the 7th. So if you're umming and ahhing whether or not you do want to use Lawpath and cash flow is a bit of an issue, guys, now is the time. If there's any gray areas within your understanding of Lawpath, if you just want to know if we really are the right provider for you, go ahead and throw yes in there. Let's get on a chat and I can hopefully expand your understanding of who Lawpath is and how we can help your business moving forward. Now, what are we covering today? What are our speakers covering today, actually? I'm just going to sit here in the background looking pretty. Pre-2026 must-dos, contract and policy updates, entity structure reviews, cash flow and forecasting tips, ATO and compliance reminders, and smarter planning for 2026. Now, for anyone who is new, we will have a Q&A at the end of the webinar. So please go ahead and throw your questions in the Q&A, not the chat. If you get it in the chat, we will do our best to try to reach out at a time to get to that. But if enough people are throwing in suggestions throughout, we will tend to lose the questions, and then it's a bit unfortunate. So right at the end, guys, Q&A, throw it in there. We will get those to you at the end. And yeah, so how many business owners actually know what's happening in the engine room of their business? This is a question that we posed with each other when we were considering today's webinar. How many can confidently say they stay compliant year round, understand their structure and tax position, have contracts that truly protect them, run clean books, and plan for growth and intention, not just guesswork? Not many is what we've been able to statistically consider. That's why we've made today's webinar. At Lawpath, we give you every tool, every resource, and every layer of support so you can run your business like someone who intends to grow, not someone hoping to, hoping it all works out. Too many times, me as someone who helps people register companies, I've almost spoke people off the ledge. You have a great idea, you have great intentions, but if you're really not ready to live, breathe, eat, and sleep a business, if you don't actually want to reach a goal, if you're just happy to let it stagnate and plateau, then maybe hopping on these webinars isn't really the thing for you. We want success stories here at Lawpath. We want to encourage and incite growth and inspire. So if you are here to grow and inspire and do something with your business, even if you've been running it for a while and you feel like it's not getting anywhere, if you do want to take that next step and try something different, then please, we would love for you to consider Lawpath to be the catalyst for that. Now, who are our speakers today? If you are not new to Lawpath, if you have attended for a fair bit of time, you will know our head of tax and accounting at Lawpath, Timothy Quinn. He's a chartered accountant. He has expertise in business structures, tax planning, SME advisory, budgeting, financial reporting, and analysis. He's been running for about 18 years. He's been on the director level for so many businesses, absolute wealth of knowledge. So happy to have Tim back as always. And we have a new speaker today, Yien Lo. She is one of our senior corporate and commercial lawyers here at Lawpath Legal. She has an expertise in governance, corporate structures, M&A, commercial compliance, and she also specializes in drafting and negotiating service agreements, SaaS contracts, partnership and shareholder agreements, and so much more. She also provides founders and growing businesses with practical, strategic, and legal guidance day in and day out. So we're so happy to have Yien here as well. Without further ado, I will go ahead and pass it over to Yien. Thank you all so much for participating in today. And yeah, we look forward to getting some feedback from you all later on. Thanks.
All right, so Joe, can you move to the next slide? Okay, so all right, before we get into the checklist, here's the big idea we want to leave you with: a smoother January start with a structured December. So most businesses don't get into trouble because they're careless. They get into trouble because things snowball at year end. So contracts roll over, renewal get missed, licenses expire quietly, and before you know it, you're starting the new year with avoidable risk. So think of this as a short, focused reset. The goal is to finish 2025 clean and enter 2026 with clarity. These are the three outcomes we are aiming for. First, stay ahead. That means you proactively deal with legal and financial loose ends now, and not in January when everyone's back, busy, and trying to put out fires. Second, reduce risk. This is where you tighten things that attract penalties, disputes, or disruptions, any renewal, lodgements, and contracts that are out of date or expiring. Third, plan clearly. If your documents, registrations, and records are accurate going into 2026, you'll make better decisions faster because you know exactly where you stand. So with that in mind, let's jump into what you should actually review before the year wraps up. Can we go into the next slide? Okay. So this is your end of year legal housekeeping list. You don't need to do everything in one sitting, but what you do want to is to start working through each category before January. First is the registration and business detail. Start here because this is foundational. You should confirm your ASIC registration is current and check whether there's any company details that change in 2025, be it your address, director's details, shareholder, trust, or partnership details. Also check your business name renewals and make sure they are linked to the correct IBN. These are the kind of back-end issue that may create major headache later on, especially if you are trying to raise money, sell your business, or take on higher value contracts. Second, contracts and agreement. These are some of the most important sections for most businesses. You should identify contracts expiring early in 2026. It can be your supplier's contract, client's contract, your subscriptions, your contractor's agreement, and decide whether you are renewing them, renegotiating the terms, or moving on. Then review your core templates, client's agreement, your statement of works, your retainer, your service terms, your NDAs, and ask yourself, do these still reflect how you operate today? If not, you're exposed because your contract set the rules when something goes wrong. Also check employment agreement and your customer-facing terms like refund policies, your website terms and conditions, your service terms. If they are outdated, you may not be protected. Thirdly, internal policy and documentation. If your business has grown this year, your policies need to catch up. For example, you should refresh your privacy policy so it matches how you collect data now, including any new tools or platform that you're using or incorporating into your system. And make sure your HR policy still reflects the current team structure and also the legal requirements. Fourth, the licenses, permits, and industry requirements. If your industry requires specific licenses or certifications, such as if you are in constructions, if you are in the food or healthcare sector, check if these permits or licenses are still valid into 2026 or whether any new rules have been introduced over the years. You don't want to discover in February that a permit lapsed in December or that your setup is not compliant. Fifth, intellectual property protection. So this one is often neglected and it is expensive when it goes wrong. You should check trademark renewal, and if you build any new brand assets this year, consider whether they should be protected. Confirm your domain names, digital assets, and also online accounts are actually owned by your business, not by one of the founders, not by one of the shareholders, or not by your employee or a contractor that you actually only engage to do the work. And finally, if a contractors or any external providers help you to build anything, be it marketing, content, course content, design, software, or code, confirm your intellectual property assignment deed are in place. If they are not, your business may not be the owner of this intellectual property. So these are the legal checklists. Once these are in motion, there are a few practical business cleanup that can make January a lot easier, which brings us to the next slide. Your year-end action to boost your January start. Now, these are the practical action that help everything run smoother when you come back in January. First, clean your CRM. You should remove any stored leads, archive all clients, and update contact details. A messy CRM costs you money because your team wastes time chasing the wrong people and your marketing data become unreliable. Second, update your core documents. If your documents are from last year or worse from several years ago, get them refreshed and upload clean version for 2026. This is where we often see risk hiding in plain sight. Old pricing structures, unclear scope of work, missing protection, or clauses that don't match the way you deliver services today. Third, organize digital files. You should archive all folders and create a clean 2026 structure now. If you can't find the right contract quickly, you can't enforce it quickly enough, and that's where disputes get messy. Fourth, schedule your January meeting early. Log in planning time with your key people and your accountant before everyone's calendar explodes in the new year. January always moves faster than you expect, so you want clarity at the early start. Fifth, review your tech and subscriptions. Audit what you are paying for, cancel what you don't use, consolidate any overlaps, and confirm renewal dates. This is a quiet source of financial leakage for a lot of businesses, so taken together, these are not little jobs. They are structured, high-value actions that give you a cleaner legal position, clearer operations, and fewer avoidable surprises for 2026. I'm going to hand this over to Tim now to bring you through the accounting checklist.
Thank you very much, Yien. Much appreciated. I'm going to just quickly grab on a point that Yien just made right at the end there, which was grab your accountant or your lawyer because January is a quiet time. It certainly is, and what it is also a quiet time, not just meetings. It's a quiet time to do professional work. Now, here is a hint. While your professional accountant or lawyer has less work on, they are more willing to offer you discounts So why is December a really, really great time for you to start looking around and seeing, hey, are there some changes I need to make to my business? Are they legal changes? Are they tax and accounting? Because you'll probably be able to do them cheaper and quicker. We are all desperate for work. I used to work in international tax, and no one in the rest of the world could understand why Australia shuts down between Melbourne Cup and Australia Day. 2.5 months where we basically do nothing in terms of professional services. It is true. And we're all desperate to do more work. So it's a great time for you to actually engage some professional help. It's also a great time to do it yourself. So I like to separate things into housekeeping matters and into forward planning. Uh, what's more important? Probably forward planning. But we do the housekeeping first because we get our house in order. If anyone's tried to put up their Christmas tree and their house is a pigsty, you're going to struggle. You do your housekeeping first, you get able to do your planning better. So when we're talking about housekeeping this time of year, you reconcile your accounts and sort out your outstanding invoices. So Xero is fantastic. You get in there, Xero knows what's going on in your business bank account, and you think it's set and forget. Not quite. Maybe next year. Their plans are good with their software. For now, you still have to go in and tell Xero what some of those transactions are. Maybe you don't do it that regularly. Maybe silly season has taken you away from doing a few of those things. It's a good opportunity to go in and get things sorted out. Make sure your payroll info is set up. Make sure you've linked single touch payroll in your software to the ATO. It's a pain in the behind to do first. Once you've done it, once you've gone through the hassle of linking everything, it makes your life so much easier. It makes your business that much more compliant as well. When we talk about expense categories, how is your chart of accounts working for you? This is something that most businesses just accept. They take the template, they take the same version of company accounts that everyone else uses, and as a result, they don't get financial reporting that's useful for them. Your business is your own, and a lot of businesses are similar, but only you know what information you want to get out of your accounts. Don't just set and forget your chart of accounts. Go in and have a look. Are you reporting at the level of detail and with the oversight that you need? Either have a crack at changing it yourself or engage an expert to help you set up so you can have more important, more valuable financial information. And of course, check your super. I don't know if anyone reads the news extensively. Maybe it's only in the financial and accounting presses so far, but not paying super and not paying PAYG withholding tax on time is getting to be a very, very expensive mistake. Lots of people get these, we used to just call them love letters, the letters from the ATO with the red at the top. If anyone's had them, I've certainly had my fair share. They've upgraded them to DPNs, so these directed penalty notices, where suddenly people are individually getting their salaries garnished by the ATO because of company debt in relation to tax. Get on top of it, engage with the ATO if you need to, engage with your accountant. Let's make sure you're on top of your super. Once all of that's done, all the boring stuff, now we can start to look forward. Now, most of you will be on a July to June year. You think, why are you doing a calendar year budget? Well, why not? It's been 6 months since you did your last one. Is that really accurate? I don't know any businesses who get their budget right. It's not the point of a budget. It's a best guess. Do a reset, do a review. Let's see how you are 6 months into your budget. How accurate is it? What needs to change? Do you understand your cash flow? You might have done a profit and loss forecast that looks great. And you say, well, why is it every couple of months I'm looking down the side of the couch to find some 10-cent coins to pay the bills? Well, because you haven't considered your cash flow impacts. And the reality is, even a good business has peaks and troughs of cash. And there are times where you really need to factor that in. It's a great opportunity to look for tax efficiencies. You know enough 6 months into your business to know how things are tracking, big picture. Shouldn't be any huge surprises between now and June. So it's a good opportunity to chat to your accountant about how you can save some tax because everyone will be wanting to chat with them in May, which is also the time that your tax return is probably due for your company. So really, really good opportunity to do it now when things are a little bit calmer. You can start thinking about how you're spending next quarter's spending. What are you going to spend things on? So we'll just move ahead. We'll talk about December deadlines. Now, there's one that sticks out like a sore thumb there, and anyone that's had this ASIC review will know that it's that one. ASIC annual reviews do not come out on a calendar year basis. So why am I saying consider it a December deadline. Because do you actually know what your annual review deadline is with ASIC? Most people don't. It's on the anniversary of your incorporation, which if you've been doing it for a few years, you can't remember when you incorporated a company. It's the least important thing about your business. And for whatever reason, ASIC has decided to come down hard on penalties for late lodgement of these annual reviews. Now, our ASIC compliance team here at Lawpath are very good at handling for you, but if you're out there self-managing, it's really hard to get it right. So you don't know when it is. Let's assume it's December. Let's assume you might already be late. December is a good reminder to check your ASIC documents. Go and check your using your corporate key or whatever system you use, or engage Lawpath to help you out. Find out when that annual review is and put it in your calendar. It's really, really hard. If you haven't updated your address, if it's come in the mail, which they often do, and they get lost, it's really hard to stay on top of that before you get slapped with a big fine. Some of the other deadlines are far more routine. The ATO, again, acknowledging this crazy shutdown that we do over our beautiful summers in Australia, it does give everyone an extension. So your December BAS, which is normally be due by the 28th of January, they get you an extra month. So 28th of Feb, which is not to say don't leave it till February. Do it now. Get started now, and you can lodge early in January. It's just get it off your plate while things are quiet. Super, there is no extension, so Super is still due early in January, so or later in January, but certainly there's no month's grace for Super. So I often say if you're doing monthly payroll, do your December quarter Super at the same time. Do it now. While you're thinking about it, you already know what the payment will be. We can just get it in and get it out of your mind. And of course, STP, every time you run a pay run, you should be doing your STP, which is just a button click just to confirm to the ATO how much everyone's been paid. And I think I might be about to pass you back to wonderful Yien.
Hi, thank you, Tim. That was really insightful. So, all right, now we are moving on to the parts of the session which usually deliver some of the biggest risk reduction for the businesses. So that's refreshing your contract, internal policies, and template for 2026. Now, most of the legal problem we see in small businesses aren't caused by a lack of documents. They are caused by documents that do not reflect or match their business. So pricing change, services evolve, new tools get used, staff structure shift, but the paperwork stays stuck. So the focus here is simple. Make sure your legal foundation reflects how you operate today, not how you operate when you first started. Because if there's ever a dispute, a late payment, a scope blowout, or an IP issue, the contract you signed 5 years ago is still valid today, and that's the one that decides the outcome. So now let's look at why a refresh matters and what you should update. So outdated documents are one of the biggest risks for small businesses. And again, it's not because they're bad, but it's because businesses move fast and contracts don't update themselves. So these are the three reasons why you should refresh your contracts going into 2026. First is to reduce risk. All contracts often don't cover new regulations, changes in how you deliver services, and tools you now rely, or the biggest risks that come with growth. If your business expands and your contract needs to expand with it, otherwise you're exposing a gap. Second, to improve clarity. Clear contracts prevent dispute by lining up expectation from day one. This means your scope of work reflect what you actually offer now, timelines are realistic, the process clients need to follow is spelled out clearly, and you're clear on how revisions, approvals, and communication works. Third, to protect revenue. A yearly refresh is where you make sure your pricing, billing cycle, and payment methods are current, and that your late fees, cancellation, and overdue protections are strong enough to actually work. It's also where you make sure your IP ownership terms protect your assets, including the backend system or templates that you're relying on, and that any upsells, add-ons, or retainer changes you introduce in 2025 are properly reflected in writing. So the bottom line here is that contracts aren't just admin, they're revenue protection and risk control. So next, I'll show you what to update first. Next slide, please. Okay, so when you're updating for 2026, start with the contracts that run your business every day. So that's going to be your core business contract. Review your client's facing contract, including your service agreement, your statement of work, your onboarding documents, your website terms and condition, anything that's client facing. So pay close attention to the payment terms, the late fees, termination, liability, cancellation provisions, because cash flow disputes are still the number one trigger for legal conflicts in small businesses. Don't forget, so if they are outdated, you're exposed not just legally, but maybe also reputationally. Second, employment and HR document. Make sure your employment contract reflect the current pay, roles, and entitlement. Update your HR policies, leave, flexible work, work health and safety, the conduct that you expect of your employees, especially if you have gone remote or changed the team structure. If you use contractors, confirm your contractors agreement and intellectual property assignment are current, because without those, you may not own the work that you're actually paying for. Third, commercial protection. Update your NDAs and confidentiality templates. Review your IP ownership clauses again in your service agreement. Tighten indemnities and limitation of liability clauses so your risks stay proportionate to the pricing, to the fees that you actually charge your client. So that's the checklist for what to look out first. Next, I'll break down the specific clauses that tend to need attention. So what to update in 2026 contract? On this slide, I'm walking you through the high impact contract priorities you should focus on in year 2026, the areas that we have seen most often create risk, dispute, or revenue leakage if they are not properly handled. First, always define your scope of work properly. This is especially relevant if you are a service provider, because this should be updated to remove any sort of ambiguity and any mismatch expectation. You should clearly set out your deliverables, your milestones, the timelines, exclusions, and most importantly, change or control in variation process. So if any work expands, you have a fair and structured way to price and approve changes rather than just absorbing extra work informally. Too often, we have seen dispute arise between a service provider and a client because they are unclear what scope is actually covered in the contract and what scope will be considered, additional scope of work that will be separately chargeable. So if you focus on this area, you're not just tidying up the contract, you're actually building a stronger legal foundation that reduce risk and protect your margin as you grow. So you can also update your service description and pricing so they reflect the reality. You should check that your contract describe what you actually deliver today, not what you actually offered 2 years ago, and that the pricing inclusions still line up. If your documents are out of date, you invite scope creeps and misunderstanding. Then you should always tighten your payment terms. You should make sure your contract spell out the due dates clearly, define what count as late payments, and if any late payment interest is chargeable, set that out. Set out your rights when it comes to enforcement of any late payment fees and interest. If your payment term is vague, you are the one carrying this cash flow risk. Termination clause. This protects you against any early exit, non-payment, or non-performance. You want clear rights to end the agreement if you need to, and clear consequences spelled out if a client walk away mid-project. Next one is confidentiality. So this is not just to tick the box, but it actually protects your commercial information and clients' data. If your business handles sensitive data, this clause matters a lot more than you think. Next one is also to put liability cap in place that match the deal. So you should never leave liability unlimited by default. A sensible cap protects you from the worst case scenario where a small contract creates a huge exposure. Your risk should be proportionate to the value of the work. Last but not least, get a crystal clear idea on IP ownership, including your backend. You should separate what you actually own and bring into the project. So your backend or background IP should be owned by you. It include any code, tool, system, or methods, know-how that you actually already own. And what you create specifically for the client, it will be separate from that. And what rights the client actually need to use. So you want your client to get what they need without accidentally giving away your engine room. Now, these are the high impact clauses. Now, moving on to the next slide, let's talk about your internal policy, because contract only solve half of the risk picture. So policy protect you from internally. They shape how your team operates day to day. If your business has evolved this year, your policy needs to catch up. These are the 4 key areas to review. First, privacy and data. Update your privacy policy and internal data practices if you are using new platforms, you're using new tracking tools, or implement new AI tools. you're collecting data differently in 2026 than you did in 2024, then your documents and internal procedure need to reflect that. Secondly, HR policies. Review your leave, remote work, performance training, work health and safety policy, and make sure that they reflect the current operational needs. This is especially important if you have hired new staff or gone hybrid or introduced new expectation around how work should be done. Third, multi-factors authentication, breach processes, data breach processes may feel operational, but they also come with legal protection. If there's ever any cyber incident, or regulator and insurers always look at whether you had reasonable control in place. Fourth, operational playbook. This is where your internal process meets client risk. Onboarding, complaint handling, delivery workflows. If your client experience depend on repeatable processes internally, then that process should be documented. It should be consistent, that your staff can adhere to them, and it should be lawful. So the takeaway here really is, don't let your growth outpace your paperwork. A timely policy refresh now prevents chaos later on. I'll be passing the floor back to Tim.
Very kind of you. And this is kind of one that either of us could take, because when we're talking about reviewing your entity structure, invariably there are both legal and tax consequences, which is why we love working at Lawpath together, because you've got the same people in one room. You don't have to brief the same issues to two different people, get two different answers. When you work with us, we bring the legal and the tax into one page, make sure we're on the right steps. Now, why are we thinking about structure now? Because the structure that you were born with or that you inherited is not always the best structure for you going forward. So let's have a look at maybe why it might be time for your business to restructure. My first and most important consideration is tax efficiency, naturally. So each structure is taxed differently. That doesn't just mean that the tax rate is different at different structures, although it is. It's all about flexibility of when we declare income. If we take a really simple scenario where we have a company that's making profits, paying tax, and paying dividends out to shareholders, we can think maybe it's time to have a trust level interjected above that, in between the ultimate beneficiaries and the company. Now, you might think, well, the tax rate's going to be the same in the end because it all comes out in the wash. You ultimately get taxed on your beneficiary, on your distributions from the trust anyway. And to a degree, that's true. Where you can really leverage some huge efficiencies is this idea of flexibility. It's the idea of there are certain structures that, and trusts primarily, where you can split income and you can give it to people with lower tax rates in your family group. Or you can delay distributions. You can use things that we call bucket companies to park profits at lower tax levels and distribute out in the future. So these tax efficiencies really come up all the time. They're an important consideration of structure, not the only consideration, but it's one of those things that you do balance up when you're looking at if your business structure is right for you. Depending on the start of the stage of your business and the type of your business, it might be more sensible to retain profits within the business rather than declare them out to shareholders. It's one of the things that we look at from a tax side of things. Now, I won't step on Yien's toes. She's actually going to cover the different liability protection levels later on in this presentation, where they look at the idea of risk exposure in these different business structures. I would say it's not stepping on our toes too much to say that sole traders are just individuals. So legally, if you run an ABN, your assets and your risks are all intermingled with that of your business. So of course there are risks, and whenever Yien talks to her clients about risk and protection, restructuring business assets and business structures is one that comes up early. From my side of things, I also look at growth and investment. There are certain business structures where it's easy to raise capital comparatively if someone's keen, and there are other structures where it can be quite painful. So when we really give a personalized service for our clients and make recommendations about structures, these are the three big topics that we consider and that we weigh up, because there isn't always one answer. What are these types of structures? if we bring them up as they're loading up now, I've already removed one, so that might be why my colleagues are slow to move to the next slide. The big three that we come across are sole traders, companies, and trusts. There was a partnerships option there, and I removed it. Now, that's not to say if you're here on this presentation today and you've got a partnership that I think any less of you. I don't. It is just a practical concession to say that we see less and less of partnerships. When I started in this industry almost 20 years ago, there were already not that many, particularly at the top end of town, but even smaller businesses, there weren't many partnerships. Now we see practically none. The benefits of partnership can be generally held in different structures, and there's a lot more upside. So just very quickly, the main three sole traders, if you're just dipping your toe into business, if you've got a low risk, probably low ultimate profit business, it's very, very simple. You can jump on the Lawpath platform, have an ABN in the next couple of days, away you go. That's it. But of course, the downside of that is the lack of asset protection. If you personally are very fortunate and you've won the lottery and can therefore afford to own a house in Australia, particularly one of the major cities, then if you're out there running a business, you're exposing that house to a significant degree of risk. If you're out there, you can be sued rightly or wrongly for any number of things, and if there's a judgment against you in a civil case, they can potentially come for that. There's also no real tax efficiencies from sole traders. Your tax rate is what it is. There's no way of getting around that. When we're looking at more serious businesses that need sort of their own independent legal personhood and it makes sense, we're looking at growing businesses, we're always thinking about companies. So there is a much lower company tax rate straight out of the gate. 25% is lower than obviously top individual rates. That makes it a lot more attractive to reinvest profits. So it's a very sensible structure for that. And of course, it's much easier to raise money inside a company as well. Much easier to offer shares. Now, the downside is it's its own separate legal personhood. The legal person, the ATO, treats it separately. So you'll have to do sets of financial statements, tax returns. Doesn't have to be a huge burden. It's if someone hasn't used the services of a professional accountant for a while, you might be surprised. Costs are coming down. I'm able to offer pricing through Lawpath Tax that I would never think possible for small businesses. We are in a great era for being able to access higher quality, lower cost professional costs. So higher quality, lower cost. Got to get that one right. Professional services. So I do encourage you to have a crack at it. Trusts. If anyone's sat through my trust webinar, they know I get pretty excited about them. Trusts are great. Trusts are great for protecting assets, but also because of that tax flexibility that we already spoke about. They have taken a little bit of a hit. There have been a few bits of legislation and some ATO guidance about trying to restrict that. It's still very much on the table for most people, most cut and dry family trusts without too much complexity. As I always say, there is a reason that 1 in 3 federal parliamentarians have a family trust. They're not going anywhere. They're extremely beneficial. But again, another layer of cost and complexity. Talk to your accountant, talk to your lawyer about whether it's actually worth it for you. Often it is. All right, I love this slide. And I think Camilla, who put this one together, I think this is fantastic because what are some signs? The number one question we get on these webinars is, how much money do I need to be making in order to consider raising a structure? That's probably one lower down on the decision tree for me. I think there are just so many things that you need to weigh up. You need to consider these all. But my favorite one, Camilla, she's put, do you feel like your current tax rate is too high? I love that, the vibes of that. But it's true. There is a reason. If you feel like you're out there as a reasonably small business who's getting taxed at every turn, who's doing their BAS, paying then, paying super, which feels like a tax, lodging, you finally get to the end of the year and potentially there's not much left in the business bank account and you get hit with another bill. That's probably a feeling that you should address with a professional. It's definitely, it may be time to restructure. There might be something out there that we could be doing better. If you're in a really simple structure and you're getting a lot of income and it's pushing you into those top tax brackets, that's going to be painful. It's generally a time to jump. Definitely if you're getting staff and contractors are risky. We love staff, we love employees. I certainly love my team here, but I have to accept that every time I hire one, I'm taking on some risk. So for that reason, we definitely would encourage you to reconsider being a sole trader if you've got additional staff coming on. Likewise, the quality and quantity of the work that you've got on, if you're getting bigger clients who typically will have very good lawyers, maybe it's time to incorporate yourself. And of course, if you're thinking about raising money, then you should be having a crack at a different company structure as well. We did briefly say, look, is there a tipping point? No, in terms of revenue, there isn't, but we do see a lot of clients once their sole trader business starts to earn between 100 and 180 and $120,000 of profits, then we do start to encourage them to jump into companies, or at least to consider it. And there's probably a point at probably a bit higher, maybe 150 to 200,000 income, that I would encourage companies to start thinking about structuring that under a trust. So maintaining the company, but putting it under the trust. And again, it's going to be different for every person. And with that, I hand back to Yien to talk you through some of those asset protections from different entities.
Okay, thank you, Tim. So now that's one of the most important concept in today's session. Your business structure is not just about tax, it's also about risk and protection. So as your business grows, the stack grows with it. You take on bigger clients, you have larger contracts, you hire more staff, hence more exposure. So that's why protecting your personal assets become more important over time. So let me walk you through the four ways structure directly impact your risk. First of all, separation of your personal and business risk. When you operate through the right structure, and that structure is structured correctly, be it a company or a trust setup, you create a legal boundaries between you and the business. That matters because if the business runs into trouble, your home, savings, and personal assets are far better protected than they would be in a sole trader setup. Limiting liability. So this is a practical outcome of that separation. If something goes wrong, be it a dispute, a claim, or a debt, the liability generally sit with the company, not you personally. So now there are exceptions depending on, if you actually provide any sort of guarantee to as a director or the conduct. But as a baseline, the right structure reduce personal exposure. Third, shield against dispute. Good structure and strong contracts work together. A clear corporate structure plus properly drafted agreements means fewer gray areas. And if something does go wrong, your risk exposure is lower and easier to manage. Finally, structure affects how safely you can grow. So the right setup allow you to bring on staff, partners, or new income stream without unintentionally exposing yourself to personal claims. It's basically the difference between growing with confidence versus growing with hidden risk. So the takeaway from this slide is really, as your business grows, structure becomes the foundation of your assets protection. Which brings us to the next question. How do you actually review your structure properly before 2026? Now, these slides give you a simple, structured way to review whether your current setup is still the right fit for 2026. You don't need to overcomplicate it. You just need to walk through these few steps. First step is to review your 2025 revenue and profit. Start with the numbers. If your income has grown, margin has changed, or your business model shift, your structure might not be as tax efficient as it used to be. So this is where people often realize they've outgrown their original setup, and you might want to start speaking with your accountant, with your lawyers to determine what's right for you. Secondly is to assess upcoming risks. So you look ahead. Are you taking on bigger clients this year? Are you entering into new industry? Are you signing contracts with higher risk exposure? So your structure should always keep pace with that new risk profile and any exposure. Step 3 is always to map your 2026 growth plan. Ask yourself, are you hiring new staff? Are you expanding into new location and offering new services? Are you adding in new income stream? Growth plan affects structure decision because what works today may limit your growth plan. So yeah, that's one good way to look into it. And another one, of course, is to compare the structure, because once you've got the clarity on revenue, risk, and growth, you want to compare your options properly. For most businesses, this comes down to evaluating the pros and cons of operating as a sole trader versus company versus trust vehicle, depending on your goals. The point here is not which one is the best, but It is what is the best for you based on your objective, your circumstances in 2026, and in the long run. Step 5, get professional advice before restructuring. So the restructuring always may sound simple, but mistake can be expensive. So any tax event or compliance gap, it can cost you money. So before you make any change, you should always talk to your accountant or lawyers so that it's done properly and strategically. A structured review now ensures you are picking up the right setup for the year ahead rather than guessing and reacting halfway through Q1. So please reach out to us and we are able to guide you through the right structure that's best fit for you. I'm giving the floor back to Tim now to provide his insight on cash flow and forecasting tips.
Yeah, great call out there on getting advice. I don't like people to get advice when they don't need it. I often say there are things you can do yourself and should. Restructuring is one of those absolute nightmare things that you see go wrong. You see it when people move a profitable business into a family trust without realizing that there's a tax implication. It is one of those things that a quick, timely consultation and a bit of advice can really solve a lot of issues. We'll run through cash flow pretty quickly. Cash flow and forecasting. There's a lot of slides here, and they'll be in the pack that we send out. So go through them at your leisure. But it doesn't need to be rocket science. It doesn't need to be incredibly convoluted. A very simple spreadsheet with cash inflows minus cash outflows, making sure that you're thinking about tax obligations as well and GST, will get you a long way there. And do it month by month. Have it really, really simple. We do get clients coming on board or potential clients who want a budget done for them. And I always try and turn them away. I say, what am I going to know about your business that you don't already know? If we're going to do this, let's do it together. Go away, come back to me in a couple of weeks when you've had a crack at it yourself, and I'll be able to top and tail it. But in terms of the essentials, you know your business better than anybody. You know what's coming in, you know what's going out. Put it down on a spreadsheet. It shouldn't take you very long. Try ChatGPT, give it a crack. Why not? Don't rely on it, but give it a go. A lot of these things are easier than they used to be. And just on the next slide, I'll say, well, how do we actually build this very simple forecast? Keep it simple. Start with historical data. Start with this year. You know this year really well. Great position to do 2026, but you'll know the trends coming through. So you'll say, okay, let's start with 2025 as a basis. But based on what we know is happening in the last few months, this is where we think the business is going to develop. We know what seasons are coming up. We know what clients are telling us. Okay, from that, what do we think we're going to get for revenue? We know we've got X number of projects on. We know we've got 3 prospective projects out there. We think we'll win 1 or 2. Let's give it a go. What are we going to have to spend to deliver those projects or to deliver those products, whatever it is you do? You should have a good sense of your fixed costs, your rent, your warehouse costs, whatever these things are that stay stable despite your revenue. You should also have a reasonable idea of, well, if I'm going to sell 50 paintbrushes, I'm going to need to buy 50 bits of wood, 50 bristles, whatever it is. You should have an idea of your variable costs as well. You'll know what your head count is, if you need to increase your salaries, things like that. All of this you will know. You just haven't probably put it down on a spreadsheet or on a bit of paper yet. Have a crack at that and then come to a professional. Get them to sense check you almost. Say, hey, have you thought about this? But do the most of it yourself. It's a useful exercise for you to really understand the good and the bad and the ugly of your business. The most important thing there is don't just have one outcome. Don't think that you know so much and have got such a great crystal ball that you will understand exactly where your business will end up. Have a few different scenarios in mind of good, medium, bad. Like I said, the budget builder where we talk about this, just put down what you know. Just make sure you're covering off those things. So revenue, operating costs, payroll, marketing and growth and sales, and make sure you've put your tax and compliance obligations there as well. Give yourself a buffer. If you know that you need a month's worth of cash for a rainy day, if you can't sell anything for a month, or particularly if you're weather affected, make sure you've got a buffer that works for you. Just a quick things you can do to improve cash flow. If they were easy, everyone would be doing it. The reality is these are not all that easy to do, but they're quick if you can get them. So shortening payment terms. If you've got good relationships with your customers, get them to pay you quicker. But it doesn't have to go all the way out to cash on delivery or payment in advance, but even just tightening up from 30 to 7 or 14 days can help you get more cash quicker. If you're using Xero and you're not doing automations in your invoicing, you're mad, because I don't know about you, but I don't have a set time where I sit down and pay invoices. Or if it'll typically be if I'm sitting down on the couch watching TV and I get the notification. And if the notification comes through with me and it's at a time I can pay it, I will pay it, and it's easy. So don't rely on manually letting things go or manually chasing invoicing. Just get it automated, because you never know when your client will be in a position to pay. I think Yen mentioned this earlier, cleaning up your subs. I think I subscribe to every streaming service under the sun. If I was conscious about it, I'd probably sit down and cancel a few of them. Do the same thing for your business. See what you really need and what you don't. Like, this is probably pie in the sky, but if you can do upfront payments, that's great. Milestone payments are definitely a norm in certain industries. So if you're in construction or things like that, or a lot of agricultural primary producers, that there'll be things that are accepted industry norms, and that will include milestone payments, and that's great. Make sure you're taking advantage. Of course, looking at your pricing, no one likes to increase pricing, but the reality is inflation is still there. It's still meaningful. If your costs are going up 4-5%, don't let your prices just stay solid, unless that's a conscious decision that you're making. Make sure you do think about it. And we'll very quickly cover this off. This is all very, very dull. But in terms of why are we doing this in December? Likewise with the ASIC annual review, just make sure you're on top of your lodgement requirements. If you've got an accountant on a subscription basis, it really should be covering this for you. Certainly at Lawpath we do. Just making sure that those BASs and IASs are on time, which will include your PAYG as well. Make sure you keep pressing those STP buttons when you're doing your payroll. It's so easy to do. It's so easy to forget. And of course, your income tax return will be due sooner than you know it. Probably for most clients will be 15th of May in 2026, but why not beat the rush and get it sorted now? Doesn't mean you have to pay your tax now. You can still pay it a bit later on, but just get it ready. Exactly the same on the ASIC and ABN registration. I think we've covered that off to death. I won't keep annoying you with that one. Might jump straight ahead. The record keeping requirements, I think we might. Oh, you know what? I'm just going to talk through it. This is really, really straightforward. Retain your documents. Retain them, I would say, almost indefinitely. Why not? If you've got digital filing systems that can do this for you, just keep them digitally. Most of these things don't need to be kept on paper. There are certain industries where you must keep paper records, typically if they're child safety related. But for most businesses that are out there with financial records, it can be either 5 or 7 years, depending. Just put them in a digital file, get them kept. Employee records are 7 years, so everything to do with payroll you must keep. Super, even longer. So super, when you're dealing with payroll, I would keep all payroll records for 10 years. Why not? Even contracts and agreements, if they're sitting in an email somewhere, just do a bit of an audit, just do a bit of a data scrape and put them all into a file so they're kept. Now, your company register, that's a funny one. I have seen some really old company registers. I've audited Sol Pattinson's was sticks out of mind. I think its ACN was 3 or something silly like that. It was one of these really old companies. They've still physically got their company registers. They're a bit dusty, but you are supposed to keep these things indefinitely. So please do keep them. Just some compliance mistakes. We see them all the time. Don't feel like once you've missed a deadline, that's the end of the world, but do take it seriously as an opportunity to get back on track. The ATO loves good taxpayers. Good taxpayers aren't perfect taxpayers, but they're taxpayers that fix their mistakes and get back on track. And it gives you leverage down the track if you need it. If you need to lean on them for a payment arrangement, or if you have to say, I just can't lodge on time. If you've got a good record, not perfect, good's fine, you're much more likely to get your way. If you're serially late and you just can't get your stuff into gear, it's really hard to get a good outcome from them. Look, other than that, if your records are poor, it's garbage in, garbage out. So you're going to get that PAYG number wrong. You'll get any number of things wrong. The outdated records, people think it's the last most important thing to do. The ATO and ASIC can send very, very important documents that they don't send digitally. God knows why. And they'll only send them by post. If you haven't told ASIC where you live, they don't know. So you will not get that notice, and it is not a defense for you to say, I didn't receive it. because it's on you. It's actually a positive obligation on you to give the correct address. And with that, I think I'll hand back just to Yen very, very quickly, just for some final takeaways, and then back to Joel after that.
Okay, thank you, team. Now we are coming to an end, so let me put this together in a few practical takeaways that you can act on straight away. So the goal today is not to overwhelm you with like any legal or accounting theories. It is to give you a clean, structured way to finish 2025 and start 2026 with fewer risks, fewer surprises, and better control over your business. So here's a few key things that we want you to walk away with. First, finish your 2025 checklist. Don't carry loose end into the new year. Wrap out the legal, financial, and compliance tasks now so that you are not starting January in catch-up mode. A clean close to the year saves you time, cost, and stress later on. Second, to update contracts and policy, make sure your agreements, employment documents, terms, and internal policy reflect how you actually operate in 2026, your pricing, delivery models, your tools, and risk profile. Outdated documents are where dispute and unpaid invoices usually begin. Third, to review your structure. As your business grows, the structure that suits you at the start may not suit you now. So it's worth checking whether your current setup, be it a sole trader company or having a trust setup, still fit your growth model, your risk exposure, and your tax needs. Fourth is to strengthen your cash flow. Again, cash flow pressure is one of the biggest driver of conflict. So set your 2026 budget forecast and adjust pricing or cost early if needed. This way your contracts and your number are aligned. Fifth, stay ATO and AC compliant. As Tim say, you have to keep up with all your BES, PAYG, super obligation, ASIC renewal, and your record keeping. These things are boring until they become expensive, and unfortunately, penalties tend to hit at the worst possible time. And finally, take your next step. If you're not sure where to start, or if you want a second set of eyes on your contract and structure, speak with your accountant or lawyer. And of course, if you want support, Lawpath 2 and team can help you map out this properly and go into 2026 with confidence. So thanks for joining us today, and we hope this gives you a clear, practical plan for finishing this year strong.
Perfect. Thank you, Lily. Yien, I'll go ahead and take it from here. Guys, we do have one more webinar for this year, and that will be tomorrow, but this is a good opportunity to have both lawyers and accountants answer questions for you. So please go ahead and chuck a question in the Q&A. And yes, thanks again, everyone, I should mention, for joining us today. And a big thank you to Tim and Yien for taking us through everything you need to set up a cleaner, stronger, and better protected business in 2026. Now, very quickly for our plans, I feel like most of you here would already know our plans. If you don't, if there are greater questions, then please, guys, go ahead and put a yes in there. My duty is to speak to inbound and outbound as well. So I want to make sure that if there is some service or offerings that we provide that you are interested in, but you're just a bit iffy, if you're making comparisons between how we operate in comparison to your usual commercial law and accountant, let me have a chat with you. We have these wonderful Cyber Monday deals going on at the moment. And I believe the next time we will have discounts is in June. So moving into 2026, let's get you guys sorted out and let's make sure you guys can do it cheaper as well. Now we have our essentials plan, our legal advice, our accounting plan, and our tax plan. Now we also do trusts. We do company registrations, ABNs. We have a virtual office as well, but I'll just mention the main ones that people really benefit from. The Essentials plan will give you unlimited access to our entire legal document library. That's everything from wills, HR documents, commercial documents, your privacy policies, your terms and conditions, shareholders agreements, intellectual property, NDAs, everything you need in order to hand over to your clients or people within your business to say, these are the terms and conditions in which I will work for you, you will work for me, etc., etc. Then we have our legal advice plan. Our legal advice plan gives you unlimited 30-minute calls with one of our senior lawyers like Yien every day for 12 months. So depending on availability, you can have a same day or next day consultation where we will go through everything from contract reviews to business advice. And that business advice can be everything pretty much that we've mentioned today, plus some. Then we have our accounting advice plan. The accounting advice plan operates the exact same way as a legal advice plan. You get unlimited 30-minute calls with a senior chartered accountant that will take you through your bookkeeping, your payroll, your invoicing, your GST advice. We have some wonderful assistance through business structuring as well. So where is your business business now? Where is it going? How can we assist you making those future investments and future plans moving forward? And then finally, we have our tax plan. Our tax plan is very simple. We will do all of your BAS, your tax, your end of financial year reporting for you as well. And for an extra $100, we're also happy to do your personal tax return as well. So that's spouse, employees, anyone involved within your organization. These plans here are essentially designed to give you complete compliance, but also to help bolster and encourage you to make greater leaps and bounds within your business. You can't necessarily do one thing if you don't know the rules of the game. So we're essentially here to be the game masters to say, let's have a look at your business. This is your business, and this is what you can do with your business now. If you wish to upscale with us, if you wish to continue using us over the years, we can upscale with you. It doesn't matter how small or how large you are, essentially, we can take care of your business. If I had a gold coin for every single person said, oh, my business is too small at the moment, I'd be a millionaire because we always end up helping them out. Even if it's not right then and there on the spot, it's usually a couple of months later. So if you are interested in taking a new step with your business and you feel like you don't necessarily know the rules of the game, go ahead and type yes in the chat and we'll be more than happy to get that piece set up. The passgo, we're going to help you collect the $200, Mayfair, all that good stuff. Now, that's everything from me, guys. I will go ahead and chuck it over to the Q&A. We've got Vic and Joseph.
Yeah, let me jump in. I think they're both for me. Vic's asked, how do you manage overseas clients and check if you need to pay VAT? So VAT is value added tax. It's very similar to GST. Different countries will charge or require VAT. So it depends where you're selling into. From an Australian GST perspective, typically if you've got overseas clients, you will not have to charge them GST. There's no GST on exports for goods and for most services, as long as those services are enjoyed overseas. In terms of are there local VAT to your accountant, you'd have to do some research into the countries in which they are operating. Certainly Australia has started charging GST on imports. So if you were over in the States selling into Australia, there are GST obligations now that there didn't used to be. So Vic, can't answer in that the level of detail is going to be helpful, but it will be different for every country you sell into. Michelle actually in the chat came through with a few different questions, which is great. Love it, Michelle. Michelle's asked, can I reinstate a company that's been cancelled? Yes, most companies that have been cancelled, certainly voluntary deregistered companies can be reinstated. The one call out there is that if you cancelled it 4 years ago, in order to reinstate that company, you'll have to pay the last 4 years worth of ASIC review fees. So that's often a big impediment because those fees can add up. It is sometimes just quicker and cheaper just to start again. How can I move the intellectual property from an old company to my sole trader? You'd normally sell it. So I think Yen's popping a hand up. She's probably done this 100 times before. Yen, can you jump in?
Yeah, so if the old company is still, I mean, it's still there, or if you re-register it, so of course you can sell it. You can set up a deed, IP assignment deed, where you move the ownership from the old company to your sole tradership.
Super straightforward. Thank you very much.
Mm-hmm.
Some more questions that came through. Just Michelle's third question. Let's get her all sorted in one. She's asked, is there a business structure that makes it easier to work out tax implications in the US?
Mm-hmm.
No, tax in the US is a difficult beast. So you can have whatever structure you want here. If you're actually needing to be taxed, if you've got a presence in the United States that makes you taxable, there isn't a really straightforward answer to that question. They've got what are called C Corps, S Corps, and also LLCs. None of them quite align to Australian understandings of business structures. They're all a little bit different. A typical one, probably the most common one, is what you see a Delaware C Corp. So that's probably the closest thing that we have to a simple structure where it's taxed in the company level and so be it. And they use Delaware because there's no state income tax. So that's a tricky one, Michelle. I would always get advice when setting up in the United States. Really, really hard to get right. And then I think the last question is, Joseph, what are some tax legal advice and considerations to consider for recently incorporated companies? Without getting into specifics, I would say both for legal and tax, the answer is probably the same. Engage early. But come armed with specifics. This is what my business is doing. The best thing about both the legal advice and the accounting advice plans here at Lawpath is that they are here to be used. They're not here. You don't have to be afraid that every time you speak to a lawyer, you're going to get billed, or every time you want something from an accountant, you're going to get a surprise bill. The advice plans are here to be used and to be used as you need. So basically, you sign up using one of Joel's crazy discounts that we've got there for Cyber Monday, and you brief an accountant. You get on the platform, you talk to myself and Yien or whoever it is you end up talking to, and they're able to basically point you in the right direction. Because when you're starting out in business, you don't know what you don't know. There is no way that you're going to be in a position to get it all right because you don't know what might trip you up. Whereas if you talk to an accountant and a lawyer about your business, about what you're trying to achieve, we'll be able to pick up the most important things that are going to matter to you early. I would say, certainly from a tax perspective, the biggest problem I've seen in businesses is that 2 years into operating a business, everything looks great, it's profitable, you got money in the bank. You haven't really worried about lodging your tax. You haven't worried about BAS. I'll sort that out down the track. And suddenly the ATO smacks you with a massive bill, interest, penalties, and it actually kills businesses. It does take the ATO about 2 years from your missed lodgement to really start to chase and for it really start to hurt. At that point, it's too late. If you're not getting engaged and compliant early, you're going to really suffer.
And
Excellent. Thank you, Tim. Oh, go for it, Yien.
yeah, for Joseph, I think I'll just chime in here as well. I think it's really good to just have a map up what you're planning to do with your company. Whether you are setting this up as a sole shareholder, sole director, or you are partnering with other shareholders, because I think oftentimes in new businesses, sometimes 1 or 2 years down the line, dispute can arise between the shareholders. So it's always good to get for example your shareholder agreement, set out how it governs the relationship between the both of you. So this will avoid a lot of dispute down the line, and it just probably set up what you both are in charge with, and what you're comfortable with, especially when it comes to decision making, when it comes to what happens when one person leave the company. So all of this can be sorted out and put in place. And yeah, that's one thing that I will really advise client, especially when they do have more than one shareholder in a company. Yeah, thank you.
Thank you so much, Yien. Ladies and gentlemen, Yien and Tim, guys, thank you so much for your time today and your wisdom. And everyone else who attended today, thank you so much. We really appreciate you staying to the end and taking the time out of your day to educate yourselves. I will send the email out shortly. And keep in mind, we do have our Cyber Monday deals ending on the 7th, which is Sunday. One last opportunity. If anyone wants to have a chat with me afterwards, go ahead and throw your name in the chat. Otherwise, we will leave it here. And thank you all so much. Appreciate it.